does it take for a troubled online marketplace to turn itself around? Consider the case of Groupon, the company that offers millions of users incredible deals on all sorts of local products and services. For years, Groupon's revenue growth has been shrinking, and the stock has been a punching bag. But maybe it's been punished enough. Going to the end of September, the stock was already down 26% for the year. And after the market-wide meltdown, it's now lost nearly 38% of its value for 2018. Now, part of that is because Groupon reported a mixed quarter in early November. Top line missed, sales shrinking 7% year over year. Even as the earnings came in better than expected. Groupon's making real strides when it comes to profitability. And in a less hideous market, this might have been treated as a better than feared quarter. So what does the company need to prove that it's turning around? Let's take a close look with Rich Williams. He's the CEO of Groupon. Find out more about how his company's doing, where it's headed. Mr. Williams, welcome back to Mad Money.
Hey, Jeff.
Good to see you.
How are you?
Have a seat. Thank you so much. Rich, I have to tell you, I came in a little more positive, and then I read, I think, a very tough letter about yourself. You talked about how you were disappointed, you're not happy with North America, and I didn't know what to think, Rich, because I said, well, if he's not happy, I shouldn't be happy.
Yeah, Jim, well, I think, one, we hold ourselves to a very high bar, and we want to see the marketplace continue to grow. So anytime that we don't see that, that's tough, and we don't like those results. But it's also one, I was in that letter clear that we understand why. We know why those challenges exist. We don't like those challenges, but we have a plan to make those challenges go away and move us to a much stronger place.
All right, let's. Why don't you outline the plan so that we feel more confident that this is the right time to buy the stock?
Yeah, the core of the plan is based in our marketplace model and concept, and that's moving us away from email and daily deals, and really to being a utility for consumers and merchants to use every single day to grow their businesses. In the case of merchants, in the case of consumers, a place where they trust when they're hungry, when they're bored, when they just want something to do on the weekend with their kids. We're where they go to find the best prices, the best deals, and also the best selection and inventory of those transactable offers in local market.
Okay, in the conference call, and I know you left more time for questions, which was terrific, I couldn't figure out whether you were saying that, look, we're still going to advertise to build brand, but we're not going to spend too much money. I'm trying to figure out why everybody doesn't know you already.
Yeah, I mean, we have great brand awareness. That's a big piece of the Groupon power of the brand, and we're north of 80%. People know who we are. I think our opportunity there is to move just from people knowing who we are and what we've been to where we are moving and what we are now, which is a utility they can use every single day, not something they need to wait for in their inbox to give them a deal that they didn't expect in the morning.
Right. Yeah. Is there any way to make it so that when you go to the site, you can look around it without having to give your email?
Yeah, I mean, the site is completely open at this point, so you don't need to give us your email unless you're going to check out and buy something. So at this point, it is a completely open marketplace. You can search, you can discover. Actually, now is kind of one of the things that surprises people. More people come to Groupon to search and browse and just look for things that they're trying to find than come via an email.
Wow, that's a big change. But at the same time, you do say in the summary of what's next, this isn't a turnaround, it's a transformation. This were basic turnaround. We probably limit our focus to cost and optimizing our voucher business to the point it could become irrelevant. I mean, but to some degree, I thought it still felt like a turnaround to me after I read all your reports.
Yeah, and I think people have a very, very narrow perspective of what a turnaround is. Most of that is like, hey, we need to cut some costs, or we need to just tweak our product around the edges. When I say it's a transformation, I think we have a good business today. We're trying to build an amazing business, and we have a good product today. We're trying to build an amazing product. We've got to transform how we work, the products we deliver to our customers, really fundamentally change how consumers think about us every day. And that's more than your typical turnaround has to attack. And the good news is we're well on our way. We're making great progress.
Is it possible that local is hard? I mean, for instance, I know the Nextdoor people. They don't seem to be able to monetize Nextdoor, good product. Yelp had a disappointing quarter. Good product. I mean, it's such a the fraction market. Small players, many small players. No one seems to have ever just come in and tamed local.
Yeah, local is a huge space, and it's a space that got a late start. And if you think about the online and mobile revolution that we've gone through over the last 15 or 20 years, product started first. With folks like Amazon in the late 90s. It wasn't really until folks like Groupon and Yelp came into the mix late into the 2000s where you started to really get people to push. So for sure, local's late. It's a challenging space, but I would say we're producing billions of dollars of value coming out of the local space. We've grown our inventory and our relationships with small businesses by 60% over the last 3 years. we're making headway, and we see that as a massive prize. It's worth fighting for,
right?
And we like our position in the market.
Okay, should we be looking at for this transformation redemption numbers, gross profit numbers, unit use, per customer? I'm trying to get the metrics that I need to be able to say it's really happening.
Yeah, I think one great one to look at is units per customer and GP per customer, that gross profit per customer.
Okay, good.
Those are the ones that we're really looking at, and GP per customer is the kind of thing that we're optimizing day in and day out, making sure we have valuable customers on the platform, they're connecting with valuable offers. Units per customer are the thing that unlocks us over time, right? People use us, call it 4 or 5 times a year. Our opportunity in local, where you shop most of the time, is 4 or 5 times a week. So that's what we're building toward, and those are the metrics to look at long term, that we have a lot of customers buying more frequently in a profitable way. Okay, now you brought us interesting things last time. You talked about continuing education. This time AMC seems like a big deal. AMC costs a fortune. We're excited about AMC. You know, we said earlier today that we already sell millions of tickets a year to movies, and now most of those tickets are sold to neighborhood theaters. So that means we're missing out on the tens of thousands of screens all around the country to deliver that great experience that people come to us and look for every single day anyway. So we're really excited about being able to partner with AMC to offer that ability for people when they want to go see a movie and they're thinking of Groupon, they can just buy the ticket and ultimately work with them over time to make sure that we're providing that kind of pricing speciality that we bring to the table in a way that works for customers and works for them. And last question, it's not like you're losing money. I mean, the cash is building. It is a little bit of a quandary. Look, you were so transparent and honest that I feel like if things go a little bit, we could have a hockey stick. I mean, look, I think we're wildly undervalued is my perspective. Mine too. You know, we have strong free cash flow. We produce a lot of adjusted EBITDA. That's not reflected, I don't believe, in our share price today, and just shows that I think we have a lot of opportunity to grow that for folks over time. Well, I agree. I mean, it's not a lottery ticket, so to speak, but it's a company that generates a lot of cash. That's Rich Williams, the CEO of Groupon, GRPN. Check it out. Mad Money's back here for the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.